Hello everyone. Good evening to all of you, and welcome to EduTap and welcome to this RBI Grade B 2026 special descriptive series where we are going to cover important reports as far as your phase 2 descriptive paper is concerned, right? And this is the second part of this series. You would be knowing that these days we are conducting this series. When I say we, I mean to say me, Surinder sir, Deepika ma'am, right? We are targeting important reports, the static portion as far as your descriptive paper is concerned, right? So this is going to be the objective behind this video, and today's topic that we are going to discuss is global economic prospectus, right? So this is something that we are going to discuss, and we are going to see what can be the expected questions that can be asked as far as this report is concerned. So this is the expected question for today. Discuss the key highlights of the Global Economic Prospects report and its implication for India. If you do not know, this report is released by World Bank, and it is released on a semi-annual basis. One edition is published in the month of January and second edition is published in the month of June. So this is for June 2026, the latest edition that has been released by the World Bank. I hope it is clear to everyone. So let us begin. Let us see what all is included as a part of this report with the help of this question that I presented to you. So the question is, discuss the key highlights of the Global Economic Prospects report and its implication for India. So let us see what are the highlights that are there, and later on we are going to see the implications for India also. Now, first of all, if you see the introduction to this question, so in the introduction you can briefly write that what this report is all about, and you can give a short glance that what this report aims to convey as a part of its outlook. So the World Bank's Global Economic Prospects 2026 report, June 2026 report, it presents a cautious global economic outlook. The report states that the global economy is facing another major shock due to the conflict in the Middle East. We all know that what problems are occurring as a part of the Middle East, and because of this we know that the entire global economy, it is showing disruption, and yes, it is going to have an impact on India too, that we are going to discuss later on. So this has led to sharp increase in energy prices, renewed inflationary pressures, and expectations of tighter monetary policy. So we are going to see the explanation of these keywords also, that how it has led to increase in energy prices, it has impacted the inflation and the monetary policy too. So let us talk about it. So as a result, the global growth is projected to slow from 2.9% in 2025 to 2.5% in 2026, the weakest pace since COVID-19 pandemic, and the growth is expected to improve during 2027 to 2028 as energy supplies recover, monetary easing resumes, and trading strengthens, right? So this is an introduction. Of course, you can cut short it. I've written it in a bit lengthy manner so that you get a complete picture. But anyways, we are going to talk about all these things in a detailed manner, one by one as a part of the body, right? So this is all about introduction. Now let us move on to body part and let us see that what are the key highlights that have been presented as a part of the report. Now the first highlight is regarding the global growth outlook. Now when I say global growth outlook, first of all the report talks about the slowdown in global growth, right? Now this, as a part of this point, the report says that basically the entire world economy that is there, right? If you talk about the combined growth of all economies, so basically the combined growth of all economies is expected to fall. And what is a number that has been presented as a part of it? It says that the global growth at 2.5% in 2026 compared to 2.9% in 2025. So this is the projection that is there. It is expected to fall from 2.9% to 2.5% in the year 2026, right? This is the first thing. And why this slowdown is happening, why this global economic growth is expected to fall, there are multiple reasons behind it, right? But one of the main reason with respect to 2026 that has been presented as a part of the report is basically Middle East conflict, right? It is basically the Middle East conflict that is there. Because due to this Middle East conflict, what has happened? Because of this, I would say there is increase in energy prices, no doubt regarding that. So energy prices have gone up. Apart from that, I would say it has also led to inflation, and that has led to monetary tightening monetary tightening across different type of economies, right? and we are talking it at the global level right now, not in context to India. We will talk about India later on, but this is about the global growth context. So it says that the slowdown is mainly due to high energy prices, rising inflation, and tighter monetary conditions, right? And weak trade too. And the Middle East conflict has weakened growth prospects for nearly two-thirds of the economies, right? So this is something that is the first point. Secondly, it talks about advanced economies too. Now, when I say advanced economies, the report says that the growth in advanced economy is projected to slow from 1.8% in 2025 to 1.5% to 2026. Right? And this slowdown is because of what? It is because of the higher energy prices. The same point that we have discussed. The reasons are going to remain the similar because this Middle East conflict, it is the main root cause behind it. So it says it is because of the high energy prices, and the growth is expected to improve to around 1.7% in the year 2027 to 28, right? So later on, basically, it is saying that 1.8% in 2025, then 1.5% in 2026, where the growth is going to fall down. And later on in the year 2027, it is saying that we are going to see certain sort of recovery where it is expected to improve to around 1.7%, right? Where the energy prices, they can come down, the inflation pressure, they can ease, right? And because of that, the monetary policy, it is also monetary conditions that are there, it is also going to get relaxed, right? It is going to get easier. So that is the second point regarding the advanced economies. Now let us talk about point number 2, which is with respect to outlook for emerging market and developed economies. So let us talk about this point also. Now over here, first of all, the report talks about the growth declaration that is there with respect to EMDEs. EMDEs means what? It basically means emerging markets and developed economies. Emerging markets and not the developed, but I should say developing economies, right? Emerging markets and developing economies. Now, what does it say about it? It says that the growth in EMDEs, emerging market and developing economies, is expected to slow from 4.4% to 3.6% in 2026. And the report says that all EMDE regions that are there, they are expected to grow more slowly in 2026 than 2025. Why is it so? What is the reason behind it? The reason is same. The reason is same when we talk about the main reason of this slowdown that we are going to witness in the EMDs. It is going to be basically the Middle East conflict, right? And it is also going to lead to what? It is also going to lead to the commodity disruption, which basically means the commodity prices of fuel, the oil, right, and the food prices, also sort of commodities, they are going to get inflated as a part of 2026, right? And this is going to be true in context to EMDEs also. Secondly, it talks about weak per capita income growth. So regarding this, it says that basically per capita income growth in emerging market and developing economies, it is going to slow in 2026 to its weakest pace since the pandemic. And for EMDs, including China and India, the level of per capita income relative to advanced economies is not expected to return to the pre-pandemic level until after 2028, implying nearly a decade of lost income convergence. So what do you mean by that? Basically, the report says that in 2026, the per capita income with respect to EMDEs, it is expected to slow to its weakest pace, right, since the pandemic, which basically means what? Which basically means that the average improvement of people's economy, or I should say the living standard, it is going to remain weak, right? So even if I would say the economy is performing well, even it is improving, but even if the total economy grows, but people are not going to feel much improvement. Why is it so? It is mainly because of different type of reasons as highlighted in the report. For example, it can be because of increase in the population, it can be because of higher inflation, it can be because of food and fuel prices that could be rising, right? And income growth could be lower, and the same impact could be there with respect to per capita income too, right? This is going to be reflected as a part of the per capita income. So that can be the sub point 2 as a part of this point 2, which is outlook for EMDEs. Now the third one. Now the next point is regarding the regional growth trends that are going to be there. Now over here, the report provides different growth rates, right? Which, when I say growth rate, I'm talking about real GDP, right? Real GDP with respect to different countries, right? It has provided the projection with respect to that. So you can see it over here. For the East Asia and Pacific, it is 4.2%. You don't have to remember these numbers. For Europe and Central Asia, it is 2.1%. For Latin America, it is 2.2%. Then for Middle East region, it is 1.6%. But for South Asia, it is what? It is 6.3%, right? So this is something that I would like you to remember, because over here you can basically, I would say, you can connect this point with India also. India is also a part of South Asian region, right? So if the growth is 6.3% over here, of course, we are going to see some sort of impact in India also, right? So it says that South Asia remains the fastest growing EMD region, while the Middle East, North Africa, Asia and Pakistan, they are going to face the sharpest slowdown. Why is it so? Again, the reason is same as presented in the report, which is basically the fact that these regions have direct exposure to the conflict, right? So that is again another point. Now, point number 4, which is regarding commodity prices and inflation. So it says that the commodity price pressures are going to be there, and this is very much, I would say, this is very much natural because of the root causes that we have discussed up till now. Because basically, what is going to happen if we talk about commodity prices? Commodities such as oil, you can talk about natural gas, you can talk about fertilizers, food items, you can talk about metals, right? Different sort of commodities that are there. So because of Middle East conflict, what is going to happen? Because of Middle East conflict, the supply of energy is going to get shortened, right? And because of that what is going to happen? The commodity prices, they are going to be disrupted. They are going to get increased. And what is the increase? As highlighted in the report, it is 22%. So the report says that the commodity prices are expected to rise by 22% in 2026 instead of the decline earlier expected. So earlier we were expecting a decline, but because of this conflict that is happening, because of the disruption, the prices are expected to get increased, and that too by 22%. And here it highlights that the Brent crude oil is projected to average $94 per barrel in 2026, and European natural gas are expected to increase by 30%. Now you don't have to remember all this data. Okay, 30%, $94 per barrel. You don't have to remember all this. Even if you want to remember something, you can remember this 22%. That should be more than enough, right? Apart from that, of course, inflationary pressures are going to be there, right? And over here the report says that higher commodity prices, because if the commodity prices are going to be going to get increased, it is going to have the impact upon the other type of, I would say, commodities too, or I should say the other type of disruptions too, right? So the report says that higher commodity prices had led to renewed inflationary pressure, which earlier had come down, but now it is expected to get increased, where headline inflation has picked up in both advanced economies and EMDs. And the report notes that inflation expectations have also risen broadly, right? Now the next point. The next thing is regarding implications for India. So now we have seen the points regarding the global outlook, right? So let us talk about the implications for India too. And over here, first of all, this report gives the growth outlook for India. And the report projects that India's real GDP growth is going to be 7.7% in financial year 2025 to 26, 6.6% in 2026 to 27, and 7.2% in 2027 to 28, and 7% in financial year 2028 to 29, right? What does it mean? It basically means that right now we are somewhat, I would say, in 2025 to 26, we have basically, the projection was 7.7%, but this year, because of the obvious reasons that we have discussed earlier, that is the Middle East disruption that is there, the conflict that is there, because of this, what is going to happen? The projections have also fallen down. So it is 6.6% right now. But no doubt that in the financial year 2027 to 28, we are going to witness certain sort of recovery. Certain sort of recovery is going to be there, and this point is something that we have already seen. We are going to basically follow the global trends only up to a huge extent, because over there also the energy prices are going to fall down, the inflation is expected to come down, right? And also monetary easing is going to be there, and because of this we can expect higher growth, higher GDP growth with respect to India too, right? And similarly in 7% also in the year financial year 2028 to 29. Secondly, it talks about domestic demand and consumption too. So over here it says that despite uncertainty from the Middle East conflict, the economic activity in India has remained robust early in the year, and this was supported by resilient domestic demand. So it says that basically even if a lot of Middle East conflict was there and there was a lot of global uncertainty, but because of that, but despite that, what India is showing a good amount of resilient. And why the resilient was there? It was because of the high domestic demand that was there, right? When I say domestic demand, it talks about the overall demand that is there in the country with respect to, people buying different sort of goods and services, right? For example, people buying food, clothes, vehicles, electronics, or you can say business investing in different type of Indian consumers, right? Or it can include government too, right? Government and private spending that is there in India. So that since that has remained robust, that domestic demand has remained robust, that is why India has shown a lot of resilience, right? Despite the fact that the global economy, it is showing a lot of uncertainty. Then lastly, the private consumption, especially in rural areas, it has remained strong, and the urban demand has also been recovering. And because of this, basically, India has shown basically a lot of robustness when it comes to the economic activity despite the Middle East conflict. Now the next point is regarding impact of higher energy and input costs. So India's growth is projected to moderate to 6.6% in financial year 2026 to 27, and that is because of what? Again, the same reason is there, because the private demand growth is expected to slow due to higher energy prices and other input costs, right? So basically, when I say energy cost, by energy cost I mean to say that the fuel, the oil, the gas, the electricity. And if energy become expensive, what is going to happen? The transport is going to become expensive, the factory production, it is going to become costly. Apart from that, the business expenses, they are also going to rise, right? Household expenses are also going to get increased. So it is going to have multiple impacts. And when I say input cost over here, by input cost I mean to say the cost of raw material, right? The cost of raw material and different sort of resources that are used in the production, for example, fuel, fertilizer, raw material, also sort of thing, right? So it says that India's growth is still strong, but high energy in and the high energy cost and the input prices that are there, right? So that what they are going to do, they may reduce the private demand growth for some time, right? So that is something that you can interpret as a part of it, that India's growth is projected to get moderate to 6.6%. And that is the reason the previous slide that we have seen, that earlier it was 7.7% and now it is coming to 6.6%, right? And it is again one of the reasons behind it, and it is going to get moderated. And it also says that this is some sort of suggestion that if GST comes down, then it can provide some sort of consumer demand, right? It can give boost to consumer demand because people's purchasing capacity, it is going to get increased. Now the next point is regarding policy measures. So this is over here the report gives some sort of suggestion. It says that to reduce price pressures arising from high energy cost and shortage of agriculture products, especially fertilizer, what India need to do, India has basically implemented several type of measures, which includes reduction in fuel taxes also, right? And this is a welcoming measure. And India need to take similar type of measures in the future too. Now, lastly, it talks about the trade and export also. So it says that reduce US tariff and the expected implementation of free trade agreement are likely to reduce the impact of weaker external demand on India. So it says that currently the US tariffs are high, but if the US tariffs they get reduced in future, and also the free trade agreement that India is planning to sign with different countries, right, including EU, with European Union India has already signed, but with other countries also India is planning free trade agreements. So these type of agreements, they can help to reduce the impact of weaker external demand, where India can utilize this opportunity in order to boost its exports, right? So the exports can get increased, and that can help India with respect to the trade. And it also says that the structural reforms, which can include the business environment, right, if they are improvised, they can also support the foreign direct investment in India. So if you are able to promote ease of doing business, then the FDI can also get increased as a part of it in the near future. Lastly, it talks about the fiscal implication, and the report states that the fiscal deficits are expected to rise in several South Asian economies, including India. And what is the reason? The same reason that we have discussed all throughout this session, because of basically the increasing prices that are there, right, because of the inflationary impact, and it is going to impact the demand factor also, right, the consumption demand in the country. And because of this, what the government is going to do, government is going to increase the subsidies, right, in order to counter these energy prices, in order to counter the inflationary effect. So these subsidies, because of the subsidies, what is going to happen, the fiscal I would say the fiscal burden on the economies including India, it is going to get increased, right? So that is another point as a part of it. Lastly, the report provides policy priorities also. It is a kind of way forward. If you're writing this question in the exam, answer to this question in the examination, you can always give this priority suggestions, right, that have been provided as a part of the report. So firstly, it talks about global policy priorities, and the report emphasizes the need for enhanced global cooperation so that we can safeguard the energy security, we can protect food security, strengthen the trading system, right? Also sort of measures we can take. Apart from that, we need to strengthen the domestic priorities too. At the domestic level, policymakers, what they can do, they can balance inflation and growth, right? So, and they need to strengthen fiscal sustainability in order to support subsidies that are going to get increased in the near future, right, and maintain financial stability. Lastly, structural priorities too, especially for emerging markets and developing economies. So it's the report recommend investing in physical, human, and digital capital, and creating a business-friendly environment so that, of course, the FDI can be increased, the foreign direct investment can be increased in these countries, and they need to mobilize private investment, strengthening revenue mobilization, improving debt management using credible fiscal rules, right? Also, sort of measures can be taken by the emerging market and developing economies as suggested by the report, right? So, lastly, here is the conclusion. So, the global economic prospects report shows that the global economy is under pressure due to Middle East conflict, high energy prices, inflation, and tighter financial conditions and weaker trade. Right. So these are the same points that we have discussed up till now. And EMDs, they face slower growth, limited fiscal space, and weak income convergence. And what India need to do, for India, the outlook is mixed. Growth remains strong due to domestic demand, but higher energy input cost, what they can do, they can moderate the growth in the financial year 2026 to 27. We have already seen that right now the growth has been high, but the projection is that in 2026 to 27 it is expected to fall down, right? And again, we are going to see the recovery phase as highlighted in the report. And the GST rate reductions, fuel tax cuts, trade agreements, structural reforms, export recovery, they may help reduce some pressure. Overall, the report stresses coordinated global action and disciplined domestic policy for growth, resilience, and job creation, right? So this can be some sort of way forward, and I hope it is clear to you. And this report could be important for your examination. That is why we have covered it. It was released in the month of June only. So it is relevant for, as far as your phase 2 2026 examination is concerned, right? And I hope the session was effective. You can download the PDF from the Telegram channel, and I would say this should be enough. This should be enough. This much of information should be enough as far as this global economic prospects is concerned. So that is it from my end. Thank you so much and all the best.